Welcome back. So we've already welcomed everyone in the chat and all the regulars. Love that. But yeah, so this week is, I think it's week like 22.
No,
Yeah.
I'm shocked every week.
Yeah, it's actually going to work out perfectly because we have this episode and then we have 3 more. So we're going to finish on 25. Love
the round number.
For those who are live now, we put a shout out on Facebook and Instagram as well. But for those people that have joined us live, after this session, as I said, we've got 3 more episodes. So if you have any suggestions, please put them in the chat. Lexi and I were even thinking that if we've covered off something before, like snippets, because we jump around so much, maybe there's something that we've touched on in a different episode that we should build out or go back over, or so throughout this, if you have any suggestions, please put them in the chat. Or if you're watching it recorded, you can just let the Finito team know, comment on a video, or find us on socials. But yes, so week 22, Lexi is running the show today. Yeah, I've been saying that you should be doing this for like 21 episodes now, right?
Yeah.
A cash flow critique, it's your jam, it's what you're really good at. And I don't know anyone else that does this in the detail. So I'm excited to see. I haven't even seen the detail. You just usually ring me.
Quite literally the only one in Australia that I know of. If there's anyone else out there that happens to stumble across this and does this, let me know.
That'd be really interesting for people that watch it, or even advisors that watch this back, if they know of a similar or
because there is what we're talking about is cash flow critiques, which is basically like a transaction analysis, like a real life transaction analysis. And there is a lot of fintech or different tools that are available. Even now with the introduction of AI, this space is going to develop. But the way that I do cash flow critiques is like the real human doing it. You know, with anything in life, like there's the computer generated version, which is great and has its pros, but it also has its cons. But this is a real life human doing this analysis. And because it's what I do day in, day out, I can just look at something and pick out what can be changed or what doesn't look right, things like that. So the scenario that I'm going to be sharing today is a real life scenario. I have extracted client details, so that's all good. And it will facilitate our discussion today around cash flow. There'll be a lot of things like, you know, we might be talking about groceries, and then Gemma and I can start talking about that. You can let us know in the chat if you have any questions around that. I am a little bit delirious today because I went to bed so late, so I was doing my tape assignment, but I think today will be really good. I'm just going to change my view to be able to share my screen.
So before we jump into it, so for some context, why would somebody want to do a cash flow critique? And do people know they want it, or do you highlight that they actually need it? So give us some background.
Love these questions already. There are a number of different reasons why you would want a cash flow critique. I speak to a lot of people who have tried to do a budget in the past and then wonder why it didn't work or why they couldn't stick to it. And typically it's because the figures that they've used for various categories are just not realistic. They're just not real life. They've been pulled out of the air. They've been, you know, if I said to someone, what do you think you spend on groceries? The amount that they tell me, and I go through this exercise when we actually go through the critique together, the amount that they always tell me and the actual amount are often two very, very different things. And I will share some of the responses that I had to this particular real life example. But what it allows you to do as well is, even if you don't need a budget, even if your income quite comfortably covers your expenses, what this allows you to be able to do is identify where to spend your time and your focus, or what levers that you can pull in order to make change and create, I guess the ideal goal is to create a larger surplus, or a surplus just to start with, to then build on your own personal finances, to improve your financial trajectory. Because there is no magic formula or anything like that. Like, this stuff is quite as simple as get your income up, control your expenses, do something with the difference. This is how we become wealthy. This is how we create a life that we love, that, you know, money touches every aspect of our lives. There's so much importance in an exercise like this. There's different ways you can do it. You can do it regularly. You can do it annually. I do my own annually. I was telling you yesterday as well, Gemma, that I do like mini versions, which I'm going to share a mini version today, but I also do 12 months, which is this full cash flow critique. Any questions about any of that before we move on?
No, I love that. So I'm kind of thinking that it would suit people that think they're totally over their budget. So it will either confirm what they're already doing. So people like me that have like spreadsheet line by line, I could still really benefit from this to check in and see if I'm actually being accountable to what I'm saying and that kind of thing. But I can see that it would also really benefit people who are the type of people that they actually manage their money really well. They don't have any spending issues. They've always got a surplus. But as you said, they probably need to actually see properly what that surplus is so they can direct it to a goal. So it's, you know, those people that like money flows in, it flows out, and it always works. We don't have an issue, but I can absolutely still see it benefiting those people. So yeah, either end of the spectrum, there's value in it.
And there's also other random things that we get out of going through this exercise. I'm actually surprised lately by how many times when we're going through things, we identify that someone's car is not currently insured. So, you know, that's not why we're doing this exercise, to uncover that, but sometimes it does reveal other random things like that, or that you've got an automatic transfer going somewhere that you've kind of forgotten about, or I've picked up fraud on people's accounts before, whereby they just had, it was such small amounts, but it added up to a few $1,000s because it was over such a long period of time.
I can imagine unused subscriptions and stuff coming up. Like I remember years ago, I didn't realize for 12 months, and I am all over my banking. I didn't realize for 12 months that a gym membership had been coming out. I did the trial, but then I never went to the gym, and it had been coming out for 12 months. And I'm like, how did I miss this? I'm like the person like to the dollar that's checking my bank account. Crazy.
Yeah. Before I share my screen as well, I'm going to set the scene a little bit as well, because as soon as something comes up on your screen and there are a lot of numbers and things, you can get easily distracted by looking at something rather than kind of understanding what we're looking at. So this is for a period of 3 months or 13 weeks. So it runs between August and October. This is for a couple that are in their 30s with no children. The expenses part is real life. I'm not going to show you the detail because that could have personal information, but the summary is totally fine. It's totally anonymous. I have replaced the income section, and we'll talk about why when I share my screen. And then what we're going to do is just go through line by line for each different category, and Gemma and I can have a discussion on that. And then we can talk about the overall picture. You'll see when I share my screen as well that what this does is it breaks down per week. And so the benefit of seeing the data like this is that you can see trends and things like that. So for example, 1 week your groceries might be $100, the next week it might be $400, and so on and so forth. We get the average over the 13 weeks, or typically 12 weeks, but in this case 13. And then that allows us to as well plan for the future, or see, okay, retail was really, really high that week, but someone had a birthday, and know that that's a bit of an anonymous, you know what I'm trying to say, over that period. So let's get stuck into it. So that should be up on the screen. Can you see that now, Gemma?
Yep, that's great.
So as I said, period between August and October, starting with just a 1 week period. So every column is 1 week. So in this particular scenario, this is not the real life data, but it is typical of a lot of families. So we've got 2 individuals. The first person here gets paid weekly, and it's the same amount every single week, $2,000 per week. And then client B is paid fortnightly, and they're paid $2,500 per fortnight. So you can see that their income does vary over that period. If I pull across, you will be able, I do have actually one other inflow. Typically everyone has some kind of other money coming in. It might have been a gift, it might have been a Centrelink payment, a tax refund, things like that. But what I've got on the end here is the weekly average and also the annual equivalent. So this particular family would be bringing in $175,000 after tax between 2 people. Questions so far, comments? Anything you're wondering, Gemma, or anything from anyone who is watching? Let us know in the chat.
I'll keep an eye on the chat too. None from me. Love a spreadsheet, and I think it's very clear. Yeah, I like it.
And so whilst the figures that I've just popped in here to kind of set the scene are very regular, that's obviously not always the case. I speak to a lot of people who have variable income, and having that data displayed in this way can be really good for future planning.
Yeah.
Now we go down into the expenses. So before I reveal the figure actually, how much do you think a couple in their 30s without kids might be spending on average for eating out? So when I say eating out, that could include actually eating at home, but eating takeaway. It would include alcohol at, if you go to a restaurant and you have a meal and a drink, it would include the drink. So it could include alcohol. But do you want to give me a figure?
Does it include alcohol at home, like Dan Murphy's?
So bottle shop alcohol is separated out because it's obviously I don't have receipts for when you went to Burleigh Pavilion about exactly what you bought. So we have to separate it in that way. So we've got bottle shop alcohol is separate, but if you've eaten out and you've had a drink, that would be included.
Okay, cool. I am going to think on average a week, like the 150-ish.
Per person or per couple?
Oh, per couple.
So for this,
I'm thinking like maybe you go out for dinner you get takeout maybe once a week, but you go out for dinner every second week. Yeah, I don't know.
Oh, I might put it to the chat as well.
Marie has said $1,200
a month.
A month.
So what would get my trusty calculator out because I cannot do figures in my head, even though I look at figures all day, every day. So 1,200 times 12 is 14,400 divided by 52. That would be 276 per week. All will be revealed when I scroll down. So eating out on average, we've got $530 per week.
One week, $1,600 on eating out.
Yeah. That was some fine dining that particular week. Now, if you've got the income to support that, and that is something that is important to you, I am not one to tell you to stop spending $530 a week on eating out. If, I don't actually care what you spend. I'm just here to paint the picture and help you come up with a plan to meet your goals.
Yeah, I think we should actually that, even though I was like, there's absolutely no judgment, right? Like if people can afford it, and this will help them identify if they are having financial issues, then you can identify all the bits that, and it's always a trade-off. So where are the bits that you are going to still have value in your life, you'll still enjoy your life, but that you can cut back. But somebody might not think this is a lot at all. It just depends on what you're prioritizing your spending.
Yeah. So, and that's the benefit of doing a larger cash flow critique over a period of 12 months, because it does make adjustments for those, quarters. Like if we're just looking at that includes Christmas, that's probably not going to be the best indication of what true expenses are over the course of the year. I've told you this before in relation to when a mini cash flow critique is a good idea. And that might be if someone's, say, been on maternity leave, but is now being back at work for the last quarter. That's probably going to be more reflective of the current situation than what happened while they were on maternity leave. So
yeah, if there's been any major changes, like maybe they've moved into a house, they've now got a home loan or whatever, like any major changes and they think this is going forward is going to be how life is.
So in relation to this particular figure, I can already tell you now, without even showing you the rest of the document, that this is the one thing that these clients of mine need to focus on if they want to achieve their goals of building a house deposit. So it's probably a good thing for it to be this way because it's easy. Well, I say it's easy. It's easy to cut back on something, a discretionary spend like eating out, than it is if what we were looking at was a cash flow critique that just basically showed expenses that we have to, pay, match income, and there's not a lot of room to move and we just have to get income up.
They could cut it dramatically and still be enjoying takeout or dinner once a week or something. Like it's not like they have to cut it completely.
Yeah.
There's an opportunity here for them to make smart choices.
And to show the power of the situation. So it wasn't relevant for these clients because they're wanting to build that house deposit. But let's just say someone wanted to start potentially investing, and we said, okay, well, if you can cut your 530 back to 300 and invest the difference, what would that look like in 5 years, in 10 years, in 20 years? And sometimes seeing that figure is the motivation that they need to actually make change, rather than me just saying, you should probably cut this back. So with the next section, we have groceries. So if you had a couple who were spending $530 a week on eating out, how much would you expect that they would be spending on groceries?
Like $100 a week, if that.
We've got an average over this period of $356. So the conversation was actually, and this is real life conversation that happened, I made the comment that, okay, moving forward, if we're cutting eating out down, does that mean groceries is going to go up? Because, you know, you've got to eat. And the comment was actually no, because what's happening at the moment is they're buying food, but then they're going out and they're just there is a lot of food waste.
Yeah.
And so sometimes when we're trying to make change, like let's relate it back to health and fitness. Sometimes getting fit and healthy and losing weight or building muscle, whatever it is, can feel really, really overwhelming. But if someone was able to say to you, okay, just focus on this one thing, and I'm just going to use a random example, just focus on calories in, calories out. Don't worry about everything else. Don't worry about your activity. Don't worry about macros or anything like that. Just focus on this one thing. And suddenly it feels a lot more manageable. So relating it back to finances in this particular situation, well, if you change only one thing, how about we just start meal planning? You can include your eating out. We can make an allowance for that. It's not to say you can't do it. But what's one little thing that you can do that is going to get you like biggest bang for your buck and make the most impact on your situation so that you can go and achieve your goal?
Yeah, I actually had a client really similar to this recently, and she was buying groceries and never cooking because she hated cooking, and then spending lots on takeout. And so we actually went, well, still have to buy groceries, right? But maybe we actually spend more on groceries and we get you on like a meal plan. Like find a meal plan, a delivery service that you love, that you can just, so they're not cost effective, like they're not the most cost effective. It would be much better to actually buy and cook it yourself, but it's meeting you kind of in the middle. And we also made sure that she still was getting takeout once or twice a week, but it was kind of like, well, spend more, it's not cost effective, but it is actually going to be for you because you're not cooking anyway, you're wasting the food.
Yeah, and that comes down to priorities and values and all the rest of it, which is so important to talk about when we're talking about the allocation of money. I just remembered that thing that I forgot earlier, and it is in relation to eating out, and it was about that fine dining. So what I actually did in that instance is I said, okay, your average over the 13 weeks is $530, but let's exclude that particular week, that last week, the much higher amount, and see what your average is. And it was still, regardless of removing that, it was still very, very high. So what we're actually going to do in this instance is not put them on a budget or anything like that. They're quite simply, for the next period of 12 weeks, going to be more mindful of their spending because they've had this like big wake up call, I guess you could say. And we're going to repeat this exact same exercise in 12 weeks and be able to identify what has changed in terms of discretionary spending and whether that's kind of sufficient and they're happy with that, or whether further tweaks need to be made, because it's an ever-evolving thing, isn't it?
Yeah, and they might step it down. Like you don't want to go all or nothing. But I think people always focus when they do a budget on, oh, that means that I can only spend $83 on takeout. But it's not about that. It might be the actual frequency of it. So instead of doing it 3 times a week, you're going to do it 2 times. It doesn't matter how much it is. The purpose of it is to actually create the good habits. So for people that aren't budget people, they don't care about the figures. Focus on the frequency. If you're getting massages or getting your hair or whatever done, can you push out the frequency to save, not actually reduce the amount you pay each time?
Yeah. And in this particular instance, as we were talking through this, one of the clients actually, had this light bulb moment. Well, something that has worked really well for me for clothing, she said in the past, has been to allocate myself X amount per week or per period, whatever that might have been, put that in a separate account, and I let that build up because then I know that I can get that bigger thing. And so this is actually what she wants to trial for eating out, is to have that designated amount that they have nominated, that does not come from me, and to then have that in a separate account. So I'm not the biggest fan of having lots of different bank accounts and segregating money, but when we look at their particular situation and we can see that out of their entire situation, there's probably 2 or 3 areas, and we're going to go through those others,
I like the idea of that bank account, because imagine if they didn't, like, they're so motivated and they didn't get takeout for a little while, and then it built up to a couple of grand and they went, do you know what? Let's go fine dining because our food account. I love that idea. And then they can guilt-free have that night.
And actually having these conversations, like, I think most people, you know, they think they know what they spend and they're okay, and you know, they might talk about money. But when you have a designated appointment where you sit down and you have this cash flow critique that goes through every single aspect of every transaction for a period of 12 weeks or 12 months, a lot comes out of these discussions. We start to talk about things between a couple as well that they may not have actually ever spoken about before. And it can be quite revealing about a lot of different things. And that probably ties into this next line, which is, I know it already, it's alcohol. I can scroll over and show you the pattern here. So it's like every week there might be like one bottle shop transaction over the course of the entire period. You average $28 per week. I would say that is quite normal. I obviously see people who aren't drinkers at all, and that is zero. And then I see drinking in excess. And sometimes some of those conversations are more difficult to navigate, as I'm sure you can appreciate, and sometimes can cause a little bit of conflict in a conversation. But it can be a really, really good way to bring this up, because, you know, if we're thinking about a couple and one person might have an addiction, it's not the spouse bringing the issue up. It's a third party. It's me bringing it up. And it's not from any point of view other than, this is your goal. How are we going to get there? What are you willing to sacrifice? What changes do you want to make? And they are in control, but I'm facilitating this discussion. So if anyone listening is in that situation where they're finding it, maybe they've tried to have the conversations before and they're not getting anywhere, this might be another option as well. It can apply to gambling as well. And sometimes people don't realize that they know that there's a problem, but they don't realize the extent of the problem. So they're the consumables, and what I like to do, and what they actually asked me to do in this instance before I'd even told them, was tell them the total of what are they consuming every single week, and they're consuming $914 per week. And they were blown away that that is more than their rent, because in their mind, their rent, which I'll show you now, $790 per week, is their biggest expense. But their biggest expense is actually their consumables. I'm probably just going to jump over the rent. It is what it is. The only comment that I would make there is that, as a general rule with personal finance, someone is regarded to be in mortgage stress and not necessarily just mortgage, it's going to apply to rent, if their mortgage or their rent is higher than 30% of their before tax income. So whatever your gross income is, not the amount that hits your bank account, but the gross amount is, if you multiply that by 30%, if your rent or mortgage is higher or lower, you will know kind of where you sit in that regard. For these guys, I know that it's definitely lower, because it's 20, you can see here on the table, it's 23% of their net income. So that's definitely not a problem of theirs. I wouldn't be suggesting, you know, sometimes we do have to have the conversation. If your rent is 50% of your income, we have to look at alternatives.
Yeah, which is, I think, is going to be more and more common, the way that rents are going up and incomes, wages aren't increasing at the same rate. So it is actually going, so they call it mortgage stress, but it's really housing stress, right? Housing is a necessity in everybody's budget, but I think we'll see it more and more.
Yeah, this next line here, I know these figures really well because I've been in this document so much. This is utilities. So this included water and electricity. Because it was for a period of 13 weeks, that should be all encompassing with those types of bills. But it allows us, if you'll see there's another tab, I'm not going to go into it because it does have those more personal details in there. But within this critique, if there's something that doesn't make a lot of sense or something we want to dive a little bit deeper into, we can access that underlying data and see what's included in that.
This would also be great for somebody who is looking at, well, can we afford to buy a house? Like, we've got the pre-approval, we know how much we can borrow, but just because we can, should we? So here they could go, well, right now we pay 36 on utilities, but when we have our own house and we're paying more than we're paying in rent, then we've got rates, then we've got this, then we've got that. Like, this would be perfect to actually then model and go, right, what does our future budget look like? You know, we've got a pool and all that kind of stuff.
Yeah.
Love it.
And you can stress test this as well. So this is looking backwards 12 weeks. Not all the time, but sometimes it's appropriate for me to work with clients and look forwards 12 weeks or 12 months. I have one particular client that springs to mind whereby they know that they're coming off a fixed rate. So we've looked backwards, but now we also need to look forwards, and we need to make those adjustments for that increase in their mortgage repayments. And then we could also factor in possible future rate rise, because it's a lot easier to try and sort out a cash flow issue early on than wait until it's an actual really big issue. And we don't ever want to be in the position where we are forced to take action. We want to make an informed decision, know our options, try and like ease those correct types of decisions.
Yeah.
Moving on. So the next line showing here is private health. In this particular scenario, they've actually just changed their private health, which is key information, because if we're looking forwards, we need to make those adjustments. So their private health has increased. Remember how I was telling you about sometimes things that we find going through this process that we weren't expecting to find? So one of those examples was fraud. Another one is instances whereby someone is earning over the threshold for the Medicare levy surcharge, which means they're paying more tax than they otherwise would if they had private health. That comes up more frequently than I ever expected that it would before I started doing this. I've always done this for myself. In the last 3 years since I've been doing it for other people, it's come up way more than I expected. It can also be that reminder as well to tackle your life admin, the stuff that no one, even me, want to deal with. Like, we pay sometimes what we call the loyalty tax on things like insurances, whereby we've been with a provider for so many years and they've crept up our premiums and we just accept it. But if we take that time, it could be 5 minutes, it could be 5 hours. I'm very much of the opinion now that done is better than perfect. So rather than looking at every single private health insurer on the market, pick 3. If yours is competitive, leave it. If it's not, look at your other options. Because that used to be my problem, that I always wanted to do things perfectly, but then I found that I never ever did it. So at least do something.
Analysis paralysis, right? There's so much information out there, and then you think, oh, but what if the next best thing or the next best deal is just around the corner, and then you don't actually take action. And sometimes something can be cheaper, but the amount of time and effort and the potential, like, is it you're going to cause more issues to save, $50 a year or whatever. So you got to have that like trade-off. But yeah, I totally agree. Just pick a couple, look at it, and make a decision around it.
And something to keep in mind, the categories that you've seen so far are typically on everyone's cash flow critique, but the benefit of going through this as a human being and not a computer is that we can identify different categories as we critique the cash flow and pull that out to have a discussion about it. And you might see that further down the list. This particular couple didn't have too many of those examples of unique categories, but it might be, I remember I had one not long ago where golf was a category. So your WeMoney app or whatever app that you might be using to kind of paint a picture of transactions and to give you an analysis isn't going to identify, unless you have gone through and categorized everything and created your own category, it's not going to do that. So this is a service as well that if you are time poor and you don't necessarily, like, apps for cash flow just don't work for me. It's just not my thing. A bit like we talk about health and fitness. For some people, they love boot camp, hate the gym. They love running, hate dancing, whatever that might look like for them. This is the same thing. You can get similar results, but what works for one person won't necessarily work for another. The next line I've got here is insurance. In this particular scenario, this was just car insurance and one other type of insurance that is specific to this client. That ties in with the discussion that we were just having around the loyalty tax, and just taking this opportunity to, if you haven't reviewed anything like that, to make a note, and that can form part of your next steps. So we go through the cash flow critique and then we say, well, okay, what needs to happen next? What is going to move us closer to our goals? There's always something. For this client, we've got pet insurance. I questioned why there was nothing for pet insurance, and then it started at 42. It wasn't that they only just got pet insurance then, they actually had defaulted on that. So that's important to know if we're projecting forward. Telecommunications was just a phone bill. You can see it falls per month. There was another phone bill, but it came out of a business account. So that was particular to this particular client. Then we've got Apple. So Apple is those, sometimes it's just subscriptions, you know, if you've done your subscriptions through Apple, other times it's movies downloaded and things like that. For this particular couple, their annual spend on Apple was $1,500. So if that doesn't sound right to them, they can go into the detail and look at exactly what's in there. Sometimes we find, as you were talking about before, annual subscriptions that we'd forgotten about that keep on auto renew are happening. Then we've got actual subscriptions. So that is namely Netflix and Spotify. I think for these clients, totaling $716 per year. There must have been another one in there as well. And it's not to say that any change needs to happen. We're just saying, well, these were your expenses. If you're happy with it, continue. If you're not happy with it, at least now you know where you can actually make a change.
Yeah.
Any questions, Gemma?
No.
Then we've got the car categories. So these are quite typical that you will see. You can go into as much detail or as little detail. I go into as much detail as I feel is appropriate as I'm doing it. Like if something totals $200 for the year, I probably put it in with something else. For these guys, for car in total, we'll have a look at the total amount. Now, this excludes the car insurance because I put that in the insurance section, but they're spending $10,000 a year on car type expenses. There could be servicing or something missing within that space. It isn't in this scenario, but that's something to keep in mind as well because this is only 12 weeks. For retail, I'm not going to show you the figure. What do you think for a couple to spend on retail average per week would be?
So are we calling retail, like we're looking at shopping, clothes and shoes?
Anything that you buy at the shops that you don't eat or drink.
Okay. I would think on average maybe no, actually probably not. Maybe average like 100 a week over the year. I don't know. Yeah, I have no idea.
And it's going to depend on the size of the family, I find. Like I do these day in, day out.
Like, do they shop at Kmart? Do they shop at Zimmerman? Like, yeah.
I have gotten to the point where for a lot of different categories, I can identify just by looking at it, what is reasonable or normal given the situation. So in this particular scenario, this was not a problem. As I said earlier, the thing that they need to focus is on eating out. But if you can imagine, if this client hadn't have gone through this process, they may feel really bad about going to buy something at the shops when in reality they shouldn't, because that's not something that, given their income, that they really need to be concerned about. Yes, we can all probably cut down on different areas, but their retail average $155 per week from memory. See how good my memory is? Yeah, $155 per week. So we'll, as I said, compare that to the next 12 weeks. I suspect it's going to be different because we've got Christmas coming up.
But they might go, we don't want to spend 155. Like, whereas that might actually be more significant to them than the eating out. Whereas the eating out, they might be like, we love that, we get so much value. So that's really good to show, because we're like, well, 155 is reasonable. They might not feel that it is for their lifestyles. So I think that's good.
And it's not uncommon for me to talk to someone who says that they don't really buy much, but then their average to be $350 a week on retail. So it adds up, and no one, including myself, actually knows how much is spent in different areas until you look at the real data. Like, the numbers do not lie.
Yeah.
In relation to the next section is what I have labeled for this particular client, hair and beauty. So what this encompasses is hair for both members of the couple. So there's a couple of Mecca transactions in there, which is becoming very popular. I think we need shares in Mecca, perhaps, Gemma, because everyone's going there. And not financial advice. There was also Botox in this particular client scenario, which has unsurprisingly pushed up the total. How much do you think we're averaging per week on hair and beauty?
I'm going to say 250 to 300.
Oh, you're on the money. I love playing the guessing game. Yesterday, I had someone who was $1 off. This is the closest anyone's ever been. $1 off their grocery average. I was very impressed.
That is impressive.
Yes, $252 per week, which is $13,000 per year on hair and beauty.
That's one of their highest percentages.
Yeah. And we actually spoke through that because hair and beauty, as you can tell, is not something that's very high on my priority list. But there's other things that are high on my priority list that wouldn't be on this client's priority list. So I like to spend lots of money on my kids' birthday parties, as I've spoken about before. And so someone might look at that for my situation and say, like, you should not be spending money on that. But, you know, it's not their life, it's my life. And if I want to spend money on that, I spend money on that. What this critique is doing is just painting the picture for the person on the other end to know where their money's going so that they can decide if they want to make change. And if they don't want to make change to their expenses, what else are they prepared to do in order to reach their goals? Because goals typically need money. Any type of goal typically needs money, even if it's not specifically money like to buy something. It might be not working as much. You need money to be able to facilitate that. Questions, comments before I move on?
No, I worked with a client a while ago and they were spending $50,000 more than what they earned. And the reason they could do that is they had sold a property and they were waiting to buy again, but they were burning through $50,000 a year. And it was so scary. When we looked at theirs, the family, but mainly the wife was on her skincare, beauty, all of that kind of stuff was $35,000 a year. And that was like a huge wake up call to them. Crazy.
And we were actually talking about one of this couple's other goals, and there was a little bit of banter between the couple in relation to, well, yeah, okay, you can do that, but you have to cut back on the facials, like one less facial a year type thing. And so it made it, and I try to bring as much fun as possible to these discussions because otherwise it can cause conflict. We don't want it to cause conflict. It's very rare that because you can read the room, like you can see if there's conflict happening. You can read facial expressions, which I find quite funny. But because I am viewing that, I'm able to navigate the discussion in order to sometimes, and one particular scenario really sticks in my mind, where I had to redirect the conversation and just highlight to this couple. And they actually sent me a message later to say, thank you so much. It was more like marriage counseling, but it's really what we needed. Was in relation to identifying that we've all got our areas where we can be better, but you guys are on the same team. You're trying to achieve the same things. You've got the same goals. How about we find ways to support each other rather than focusing on what is wrong with the situation? And so I have no training in marriage counseling whatsoever, but given these discussions, sometimes that is kind of the types of things that we start to talk about where appropriate. It doesn't always happen.
Yeah.
Medical for this client was quite high because of the life stage that they are in and what they're going through. So that's $250 per week. Then we've got vet and pet. This was a lot higher than they thought. They thought they would be averaging $70 per week on vet and pet. That includes some dog walking, food, and a little bit of vet. It was $170. So it was $100 more per week or $5,000 more per year than they thought. So if they were to do a budget and they'd put $70 in there, one category and you failed your budget. It just doesn't work like that. Services. So I won't go into detail on that one, but the average for services was, what line are we on? $166 per week. We've got another $100 per week on holidays, which when we were talking about the overall picture, we actually subtract holidays out and just add that on because holidays typically always look different. Then we've got chemist. They were averaging $46 per week. Entertainment averaging $41 per week. And fees of $10 per week. So total expenses for, I'm going to give you the annual figure of close to $175,000 per year, earning.
Pretty much on their earnings, isn't it?
Yeah. In this, and full disclosure, this income section is fake. But But this is not uncommon for me to see. Basically, money coming in is money going out.
Yeah.
We do have a little, and this is just for my own reconciliation, just to confirm the accurateness, because, you know, with if I should transfer you money for lunch or something versus me transferring money to another account for my lunch, like, you know, between accounts, we want to try and be as accurate as possible. And so this is just a transfer reconciliation between money between accounts. And because that all adds up, we know that the data above is accurate. So yeah, that's basically what you can expect from a mini cash flow critique. And what comes out of this is always different. But this is what it would look like for you, but with your own data and your own categories and your own picture that is painted. If anyone wants one of these done for themselves, you can just reach out to me either through my website, moneyvine.com.au, or on Instagram, moneyvine.au. These are my absolute favorite things to do. So you will make my day if you want one of these done. And they all, as you can imagine, the amount of time that these take to complete vary dramatically depending on if I'm talking to a single woman with minimal expenses versus a family of 7 with a lot of expenses. So they're just all quoted case by case basis. I tell you how to get the data that I need. I come back to you with a quote and you decide if you want to proceed or not. I try and keep this process very simple. But do you have any questions, Gemma, or do we have any questions from anyone that is still watching?
No, I absolutely love it. I think that there's such a value in this for, you know, financial advisors using with their clients, for people that manage their own situation. Like regardless of your situation, you can absolutely benefit from this. And yeah, like as you said, there's no judgment here. Like I can imagine it being like a really safe space just to discuss like different of your expense categories. And it's not to say like, well, you shouldn't be spending money on that. If you can afford it, absolutely do it. But does it actually take away from your goal? And it might be that you just change the frequency out, or that's not where you're willing to cut. So then you go, right, well, I'm not really willing to cut anything. So earning more is where I'm actually going to focus. Yeah, I think people always think that when they talk to a money coach, a financial advisor, we're going to be like, why did you spend that? What have you been doing? Like, you're an idiot kind of stuff. And that's never where it's going to be. It's going to be, are you happy with what you're doing, and does it resonate with your lifestyle and add value? And if that's not what we can pull, then what else can we do instead?
Yeah. Love it. Well, we will see you next week.
Back to usual 30 minutes. And yeah, if we can have suggestions on what you want to see, that'd be great too.
Cool. I will see you then. Bye.
Bye.